In today's video, I have a small AI and data center stock making huge strategic moves. This stock has been on a huge run recently, going from its 52-week low up to a 3-year high over the past 3 months. In today's video, I will be looking at Applied Digital. APLD stock recently signed a $7 billion deal with Coreweave AI, and with another catalyst just days away, one analyst thinks that this data center stock is just beginning a multi-year bull run. But before we get into the video, I just want to say thanks to everyone watching the channel over the past few years. We just hit 53,000 subscribers today, which is incredible. And I just want to say thank you to everyone for watching. Now, if you enjoy this content and like the video, then please drop a comment and let me know your thoughts. I always appreciate the feedback. But remember that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. Applied Digital develops, builds, and operates next-generation data centers and cloud infrastructure in North America. Its data centers provide digital infrastructure solutions to high-performance computing industry. The company also provides artificial intelligence cloud services, high-performance computing data center, and crypto data center hosting services. The company's purpose-built facilities are engineered to unleash the power of accelerated computing and deliver secure, scalable, and sustainable digital hosting, along with software as a service and GPU as a service solutions. Backed by deep hyperscale expertise and a robust pipeline of available power, Applied Digital accommodates AI factories to support the world's most enacting AI, ML, blockchain, and high-performance computing workloads. Looking at the investor's presentation, we can see that Applied Digital have a world-class management team with decades of experience across industry-leading companies. The company has been positioning itself for huge growth over the past few years, and that has now ramped up with over $5 billion in funding agreements to support data center development. AI demand is increasing, and so too is the demand for power. The demand for power has capacity expected to triple in the next 5 years, with hundreds of billions of dollars being spent annually by the world's leading companies. Looking at the charts, we can see that Applied Digital has had a huge rally over the past few months, ever since hitting its 52-week low back in April following President Trump's tariff announcements. But the stock has looked unstoppable ever since, and even hit the highest price in over 3 years back last month. But there has been a considerable pullback from that high of $15.40 back to $9 earlier this month, but now APLD is on the rise again. The stock has been consistently hitting higher lows and lower highs for the past 2 weeks, and we have seen a huge wedge formation. This stock was only $4 when I called it on the channel a few months ago, so its rise is nothing short of spectacular. But with all the recent great news, there is nothing to suggest that this is stopping anytime soon. So this chart does look bullish right now, but Applied Digital's upcoming earnings report could be crucial, and a good earnings beat could prove to be a major catalyst. APLD is set to release their 4th quarter and full year 2025 earnings on July 30th after the market close, so a positive earnings could be a real boost. But what do analysts think of Applied Digital stock right now? Looking at MarketBeat, we can see that APLD stock is covered by 13 Wall Street analysts who have a consensus price target of $12.73. But there is a high price target of $20, while there is a low price of just $7. But all analysts are in agreement because there is no sell or hold ratings. All 13 have given the stock a buy rating, with one analyst going as far as to rate the stock as a strong buy. We can see these analyst targets here, with the most recent being set by Compass Point analyst Ed Engel, who upgraded the rating from neutral to buy, setting a price target of $13, while B. Riley and JMP Securities also increased their price targets last month, with targets of $15 and $18. So with the stock currently at just 10, there's a lot of optimism around the company and plenty of upside potential. So that earnings report next week will be crucial to the stock's momentum. Now, there hasn't been much direct news in the past couple of weeks, but a lot has happened for Applied Digital since I called the stock on the channel earlier this year at only $4. Last month, a new report was released detailing how site selection and data center design decisions can dramatically reduce the long-term costs of generative AI infrastructure, providing as much as $2.7 billion in data savings for APLD. The key findings from the white paper are listed here. AI factories require 15 to 30 times the power density of traditional data centers, driving the need for new power and cooling strategies. Site selection directly impacts cost. Choosing areas with standard power and cooler climates can reduce annual electricity costs by $50 to $80 million per year compared to other existing 100 megawatt data centers, or up to $2.7 billion over a 30-year lifespan. Liquid cooling and free cooling are essential, and North Dakota offers more than 220 days of free cooling annually. Again, this isn't exactly rocket science. If the climate is suitable for data centers, then there are going to be savings when it comes to cooling. And just on a side note here, Ireland has a very mild climate. We don't have very hot summers, nor do we have very cold winters. But generally, it's relatively cold climate for 8 or 9 months of the year. This is a perfect climate for data centers, so much so that Ireland now has a data center problem, where about a third of the country's total power supply is being consumed by data centers, and the Irish government has essentially paused new grid connections for data centers. This wouldn't be an issue if we didn't have the climate forward, but it just goes to show how important location and climate really is. So APLD's North Dakota facility is prime location. But the biggest news by far was also announced last month when Applied Digital entered into two approximately 15-year lease agreements with Coreweave. Now, this is important. Under the lease agreements, Applied Digital will deliver 250 megawatts of critical IT load to host Coreweave's AI and HPC infrastructure at its North Dakota data center campus. Over the approximate 15-year term, Applied Digital anticipates generating approximately $7 billion in total revenue from the leases. Right now, the Ellendale campus is believed to be one of the most ambitious data center developments currently underway in North America, intended to be purpose-built for next-generation workloads. As demand for AI accelerates exponentially, we believe that we are uniquely positioned to deliver substantial returns while supporting the evolving and dynamic needs of these rapidly evolving sectors. We view Coreweave as an ideal partner as we accelerate our growth and innovation. Guys, what do you make of this $7 billion deal for Applied Digital and for Coreweave? Drop a comment and let me know your thoughts. Now, this agreement is anticipated to generate approximately $7 million over 15 years, so this amounts to about $460 million per year. So considering that the company had revenues last quarter of about $52 million, this would be a significant increase over the current revenues. But it won't come all at once. As it says here, Applied Digital expects the first 100 megawatt data center to be ready in Q4 2025. The second building, which is expected to be 150 megawatts, is currently under construction and expected to be ready in the middle of 2026, while Coreweave also have the option of a third 150 megawatt building anticipated to be ready for service in 2027. Now, keeping in mind that the company is just about to release their earnings report in the coming days on July 30th after market close, this is a very interesting article on Seeking Alpha from an analyst who has called the very bottom back in April, but is now rating APLD stock as a strong buy once again, stating that a Q4 surprise could be the spark for a multi-year breakout. Now, these are the sort of articles that I have found so helpful over the past few years, as the information on Seeking Alpha has been vital to me when it comes to picking the best stocks. There is a link to this article in the description, and there is also my personal referral link where you can get a free 7-day trial of Seeking Alpha, so check this out. If you don't like it, then cancel it within 7 days for free. There's nothing to lose, but in my opinion, Seeking Alpha is well worth it anyways. So in summary here, Ahmed expects APLD to beat analyst estimates. He sees the lease agreement with Coreweave as having somewhat de-risked the stock, but also points to the technicals suggesting a potential breakout move and setting a price target of $27, which is absolutely huge. Now, skipping down here, in his opinion, analyst estimates for the for the quarter appear to be muted as they don't take into consideration potential sequential growth in the cloud services segment that suffered from some technical issues in the past quarter that have been resolved since then, meaning that the company could exceed these estimates, potentially setting its stock for another post-earnings run. And there is more detail on this here. The reason for this decline is the company shifting 2 of its 6 GPU clusters to an on-demand model. During this process, the company faced technical issues, but management stated in the Q3 earnings call that these issues were resolved in the second week of the quarter, meaning that both clusters were operating for nearly the entirety of fiscal Q4. The next point here is the Coreweave deal and revenue projections, but I'm going to skip this now since we looked at this earlier. But if you want to read all this, then there is the link to this article in the description. We have also looked at the technical charts earlier, but this goes into a bit more detail, and it is well worth checking out. In conclusion, the author of this article predicts Applied Digital's Q4 revenues to come at $60.9 million, offering a potential 45% beat, which could send the stock on a post-earnings run. Meanwhile, the long-term outlook has also significantly improved now that it has secured $7 billion 15-year lease agreement with Coreweave, and the fundamentals are further supported by the technicals, with the stock attempting to break out of a multi-year ascending triangle pattern on the monthly and weekly charts on high volume, leading the author to reiterate his strong buy rating for Applied Digital with a price target of $27, representing significant upside from the current levels. But guys, what do you think? Let me know your thoughts in the comments below, and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and comment. Follow me on X, and I'll catch you in the next video.